All right, breakouts. Everybody wants to be a big shot and trade breakouts. First thing is you got to spot some consolidation lows, and then there's an iceberg down there. And we'll take it step by step. If you think a market's going to break out, well, you got to identify congestion boxes. This one happens to have rotations on this green line, which is an iceberg, which if you look at the detail down here, he's done 156 so far. He's showing 12 contracts. That's the definition of an iceberg. He's only showing 12, but the order doesn't go away once he gets 12, which means he's got more than meets the eye. Now, when they go and fill him, if he's got 500, 1,000, we don't know how many he has left, but we know how many he has done, how many he's showing. We also know longs and shorts in this vertical, in their short time frame longs and shorts. That's important because when you get too many longs looking to pick the bottom and say, look at all this great support, that's when it goes. And then they're all chasing it downside. Now, in this case, it was touch and go because we had a lot of short competition. You don't want a lot of shorts when you're trying to play a downside breakout. Why? Because a short is a buyer below, period. A short is a buyer below. Too many buyers below, it's hard to go down. And so if you watch this, we got into a little bit of a spot where too many shorts, so the market rotates back up. When it's red, that's shorts. Reds are shorts. Too many shorts, market rotates back up. Too many shorts, hard to go, hard to go. Too much competition, too much competition. Right in here, we had a good moment of some longs, but too many shorts. And so watch, just watch it. When it finally goes, what happened right before it to predict it? I'm going to show you. I want to back it up a couple steps. Right there. Now remember, I paused it. He's done 136 at this moment. Still showing 12. All these rotations, all right, all these rotations are stopping at this price of 66 even because of this big order. Once it goes, it's going to go. Now, there's still too many shorts, but watch what it does when I play it in real time. And then I'll pause it. Right there, we get that spike of green and all this green that comes in, gone. And then some more green, and then some more green. And it's too late after it does this to get short. That's what a lot of people do. They'll say, well, I'll put my sell stop order to get short in here. You'll end up slipping. And then sometimes when it doesn't continue down, you'll end up getting filled lower and then getting stopped out right away. You got to anticipate the breakout, getting short above where you think it's going to break out and then ride it lower. Now, you want to keep it below this green line. When there's some red come in, you get out of some of your position, maybe not all of it. But you know if this green is here, longs are stuck, it should rotate underneath it. You see my arrow coming in real time and saying, stays below there, you could ride it down. And I'll save you from the suspense. They walked them down. All right. Now, another really cool thing happened that you see this gray line moving lower and lower and lower. That gray line is an exit order for this big green long who come in at 63.5. When he first came in, let me back it up. When he first came in, watch this. Boom, he comes in and he tries to get out a 1.5 higher at 65 even, right? This and this are attached. Watch where his offer goes. He's moving it and we're tracking him. I'll let it play. Let me fast forward a little bit. It'll go off the screen and you'll see that gray bar start to track lower. And it's him saying, well, I'm in at 63.5. Probably not going to get the 65s. And he just stair steps it lower until he finally gets filled. There he comes. See him watch. Moving it lower and lower. He's chasing price. He leaves it around 60.5. And now my arrow is on it in real time. Saying watch him as he walks it down. They're going to go and they're going to fill him. And as soon as they fill him, this long goes away. Further proving that we have tracked other people's positions. You don't have to take my word for it. And so if you watch, let me remove the suspense and fast forward a little bit. Boom. As soon as he got filled, that green went away. I'll back it up. As soon as they fill this gray, which is a sell order, the long goes away. After you're long, you're a seller. That was a sell order. And so the market showed you him chasing it. You could see him lowering it. So we're tracking obviously longs and shorts, where they're long from, where they're trying to get out on different time frames. And that's where these verticals, and that's what they are and what they're all about. Goes back to what I said. You're either in our group or on our charts.